Today's topic is the illustrious Michael Burry's life narrative. There were many highs and lows, and in this video, I'll go over the entire process of how Michael Burry came to be. Burry was the one who predicted the 2008 financial catastrophe, and as a result of his foresight, he realized a substantial profit for both himself and his investors. He is the major character in the novel The Big Short, and was represented by Christian Bale in the follow-up movie as a result of this accurate forecast. But Michael Burry's narrative wasn't always one of unqualified success. Early life and childhood. Michael Burry was raised in San Jose, California, despite being born in NYC in 1971. In layman's terms, he had a rare condition that was a severe short of eye cancer. He had his left eye removed when he was a baby. Instead, he was born with a glass eye, which had an impact on how people viewed him. Burry took it to heart that it entered his own story. His inability to interact with others and preferences for solitude and his own particular interest, which, as we can all attest, paid off later in life, will eventually make a lot of sense. His early life was characterized by his passion for learning about medicine. Burry attended the University of California, Los Angeles, where she studied pre-med and economics. After that, he attended medical school and received an MD at Vanderbilt University. As a result, he began, but he did not complete, a neurology residency at Stanford Hospital and Clinics. After Burry's long days, he would spend a sliver of his remaining time writing about trading online. He was focusing on value investing during the dot-com bubble, making him an outlier once more. It didn't take long before Burry felt that he had learned everything he could from the forums online, though back then it was not what most people would recognize as a blog. He formally left the medical field in 2000 and founded Skyen Asset Management, an investment firm, after turning to more serious ventures. He was initially ignorant that he had Asperger's syndrome, which is why he always found social interaction difficult and preferred to be alone. Burry found it difficult to converse with folks he was managing money for at the time. He wrote letters to his investors to update them on the status of their investment. Burry claims that he never feels at home in whatever organization he joins, and that he spends the majority of his time analyzing each one. Early career. As we already indicated, Burry launched a blog where he commented about the state of the market and expressed his thoughts on several stock categories. It did not take Mr. Burry's blog very long to gain the attention of the prominent fund leaders. Burry made a sizable fortune by adopting Benjamin Graham's investment method. On the internet, he identified useless stocks, and he began shorting them at Skyen Capital. Burry initially used his property and borrowed money to launch his investing firm. The fantasy book The Skyens of Shannara by Terry Brooks served as the inspiration for the name of his business. He received an intriguing phone call as he was setting up his office. It came from Joel Greenblatt, who goes by that name. He established the investment company Gotham Capital. Joel had also written a book called You Can Be a Stock Market Genius. Joel told him he had been waiting for him to leave medicine and invited Michael and his wife to come to New York to meet. The meeting caused some anxiety for Burry, which is typical of him when meeting new people. But I think most people would be extremely anxious in this situation too. Thankfully, this meeting was nearly impossible to screw up. At Gotham's office, they offered him $1 million to buy into ownership of Michael's newly created firm, Skyen Capital. This stand Burry and he accepted. This was the first time that Gotham had ever done such a thing. They are not the only ones to do this. An insurance holding company named White Mountain also contacted Burry. Its manager was Jack Byrne. who was close to Warren Buffett. Byron had discovered a deal with Gotham, and he wanted a piece as well. By the end of the discussion, White Mountain had bought into co-ownership for $600,000 and pledged $10 million to let him invest. Just like Gotham, they had not done such a thing before they met Burry. By 2001, his company had generated a large profit for the firm's investors. Again, in 2002 and 2003, the company did very well. Scion Capital had a $600 million AUM at the end of 2004 as a result of its ongoing success. In terms of the industry, this is incredible. Scion was created by Burry with investors, not profit in mind. He had a strong sense of what was right and wrong, and he lived by those principles. Michael Burry called his approach "ick investing," which he defined as taking a special analytical interest in stocks that inspires a first reaction of ick. In other words, Burry looked for investments that would turn people off based on their reputation today, but were actually good values in the long run. Investments like this would often first go down as the market sold off the stock, then go up strongly soon after as the trouble settled and the value was noticed by the market. This idea of ick investing would take Scion to a whole new level and into fame and the public's eye. The next level came in the form of credit default swaps, CDS. A CDS is essentially insurance on a loan. If the loan goes bad, the holder of the CDS gets a payout. They are mostly employed by loan holders to manage risk or by investors who anticipate default on the loans. They were not widely used as investments until the middle of the 1990s when they were first developed. Of course, Burry continued to purchase CDS at this price. Consequently, by July, he had CDS sitting in the fund valued at $750 million. This hedge fund wasn't like any other, but Michael Burry's claim to fame is not this. Most of Mr. Burry's popularity came from his ability to foresee the housing boom in the early 2000s. Career. Mike Burry, at the pinnacle of his profession and a huge short, quickly hit upon a novel concept when he started to examine the subprime finance market and bank balance sheets. He observed numerous inconsistencies and the market's unviability. Michael Burry saw the subprime market's riskiness as millions of borrowers who had little income and little assets purchased homes and automobiles using a lot of leverage. Some borrowers made very low or, in many cases, no down payments for mortgages that they couldn't possibly pay back if interest rates rose. However, the banking system was valued as if these mortgages would all be paid. Burry realized that this would not possibly continue over the long term and made a plan to capitalize on this. Burry started warning his investors about the system's tremendous risk. At the same time, most of his investors were institutions, and they were not interested in his thesis. All of their previous investments were based on the idea of a reliable system free from subprime mortgage risk. Investors started to feel uneasy and ask for their money back. Unfortunately, Burry had already entered into a number of lengthy, illiquid bets against the market, betting that the cost of mortgages would decline. Burry just declined the investor's wish because he would incur a significant loss if he exited the trades. By early 2007, the predictions were becoming facts. The subprime mortgage were coming out of their teaser rates. Teaser rates were low payments early in the mortgage that later skyrocketed, causing many defaults. At the same time, Burry was struggling. To maintain his position, he let go of some of his staff and a fraction of his positions. This is significant because these CDS are becoming surefire wins, so having to sell them in the market eats up the gains that would have come when they paid off. By mid-2007, Bear Stearns and Goldman Sachs were falling apart in front of everyone. When Burry contacted firms he was trading with, suddenly people were out sick or came up with other excuses, such as power failures. By late June, they conferred with Burry to correctly mark these CDS values, since the report has been underestimating them more and more each month. By July's end, reports were popular about those who saw the subprime crash coming. This included Greg Lipman, a trader from Juiced Bank. He was the trader who had reinitiated contact with Burry. He had copied Burry's plan and gotten money and fame from doing so. Burry's name was not hurt. Ultimately, Mr. Burry turned out to be right. His investors earned $700 million overall from his predictions, while he made a personal profit of $100 million. Scion Capital, Mr. Burry's hedge funds, generated 489.33% in returns and managed nearly $1 billion at its peak. Mr. Burry once claimed that no one had predicted that he would become one of the wealthiest investors in the world, shocking Wall Street. Despite not receiving recognitions for his forward-thinking trading, Burry nevertheless performed admirably. At the conclusion of this protracted expedition, Burry had earned himself nearly $100 million. Even more astounding is the $725 million he generated for his clients. A client who stayed with Scion the entire time saw a return on investment of about 500% after fees and expenditures were subtracted. One negative aspect of this was no one thanked Burry or expressed regret for all the mistrust they had placed in him. It makes sense why Mr. Burry disliked people. Personal life. Michael is a well-known person, but he doesn't reveal the details of his significant other, like most people in the spotlight do. Therefore, nothing is known about his private life. Burry currently resides in Saratoga, California, is married, and has kids. Burry believes he has Asperger's syndrome after reading about the condition. His son was diagnosed with it too. He generally tried to avoid debates and rarely turns to media communication. As a financial specialist and a doctor, Michael has a prominent professional reputation. Expectations are met without a hitch. He is arguably the most eminent individual in the country. Legacy. The Big Short, a book by Michael Lewis about the subprime bubble, was made into a film in 2015, with Christian Bale playing Michael Burry. What is the story's lesson? If you uphold your morals, you too can become Batman, as you can at least have a share of Bruce Wayne's wealth. What is Dr. Michael J. Burry currently investing in? There is an easy solution. Water is the one commodity in which Burry is investing all his money. Burry has devoted a lot of his efforts to buying farmland, gold, and water investments. Fresh, clean water cannot be taken for granted, and it is not because water is political and subject to a legal dispute, according to a question from Burry. At the end of the 2015 biographical dramedy film The Big Short, a statement regarding Burry's current interest reads, "The small investing he still does is all focused on one commodity, water." Burry also initiated short positions on Tesla before or around early December 2020, according to a new deleted tweet, and likely added to his short positions after the market cap of Tesla surpassed that of Facebook. Burry predicts Tesla's stock will collapse like the housing bubble. He boasted that "my last big short got bigger and bigger and bigger," and taunted Tesla bulls to enjoy while it lasts. Burry currently long puts on 100 shares of Tesla. Mr. Burry is no more an active hedge fund investor. His wealth is, of course, still vast, and he has set an example for many generations to come. His current net worth is estimated between $200 to $300 million, with no financial source. With this, he is believed to have saved many people from undergoing a total loss in the investment industry. From our discussion, what have you learned? Please let me know by leaving a comment below. And if you enjoyed this video, please press the like button, turn on the notification bell, and subscribe to Wealth-ology for more videos like this. Thank you for stopping by to watch. See you in our next video.